Welcome back, everybody. In the previous luxury episode, we talked about how luxury attracts people, its contradictions, and how companies play into our basic human desires and the paradoxes that come with it. Welcome to episode 4, the luxury pyramid, where today we're going a step further, examining the mechanics of luxury, the power of branding, and the luxury industry itself. I'm very excited, so let's talk luxury. Let's first talk about the luxury market for a second. The luxury market is massive. It is estimated to be around $370 billion and is expected to grow to around 420 billion by 2028. It is estimated to grow by around 5% a year. This is fueled mainly by rising demand for luxury products in emerging markets like China and India, where more people are becoming wealthier. But also the demographic shift is meaningful. Younger generations, especially millennials and Gen Z, are spending more on luxury products. The global luxury industry is very diverse, from cars to jets, to drinks and fashion, to cosmetics, fragrances, watches, jewelry, and handbags. Luxury cars are the single biggest channel, while personal luxury being the second largest. Think clothing, accessories, watches, jewelry, and eyewear. Another pretty interesting statistic is that 85% of all sales are still being made in store or offline. While the whole world is going crazy and going digital and is under the spell of AI, the luxury industry is the outsider. Luxury is not really made to be purchased online. It lacks the emotional connection to the customer, a key aspect for luxury brands. The most important markets for luxury brands are the United States, Japan, China, France, Italy, and the United Kingdom. This may change, of course, because India is quite upcoming as well. Let's first talk about brands. Picture this. You're, say, shopping for a bag. The purpose of the bag, usually, is to carry something. Books, a wallet maybe, perhaps makeup, right? The first bag is 50 euros. Another, nearly identical in function, is 70k. Rationally, most of us can justify the 50 euros choice. But the 70,000 euro bag, that's a whole different level of, I'll say it, craziness. And yet, people do buy it. So why is that? The answer lies deep within our human psychology. Luxury brands have perfected the art of tapping into our basic instincts and deepest desires for status, exclusivity, and identity. An emotional connection. Things we talked about in episode 3. Think about it. Luxury items go beyond serving a purpose. The purpose is not the main reason. It's more about what the item resembles. Take a Birkin bag, for instance. If the goal were simply to carry a few groceries or stash a wallet, paying that kind of money makes no sense. You're not buying a luxury product for its function. To be honest, most of the time the function of a cheaper alternative is better. You need a family car for the city? A Toyota is probably a better choice than a Ferrari. More reliable, safer, cheaper, more storage, easier to drive. You need a watch to tell the time? A phone, a smartwatch, or a simple fossil watch is probably a fine choice for its price compared to a Rolex or a Patek Philippe. You want a comfortable pair of shoes? A pair of Nike shoes is probably more comfortable than, say, the classic Gucci horsebit shoes. The point I'm making is this. A luxury item is way more than its function, more than the sum of its materials or practicality. When someone buys luxury, they're investing in an idea, a feeling, and a signal of exclusivity that can't be replicated by ordinary goods or even if it's imperfect. And this also aligns with the uniqueness theory, which suggests that people tend to want to be different from others, and owning an item that not many people want or can afford is one way of doing so. So much of the value isn't in what the item can do, but in what it represents and can't do. Our minds are wired to chase that sense of rarity, and luxury brands know it. And I find this fascinating because I have no personal connection to it, partly because I can't afford it, and partly because I honestly don't really care. At least, that's how I feel right now, though I can't say how I'd act if I had billions to spend. Thinking about all of this only makes it more intriguing. If you understand this, you should also understand there is not one type of luxury. There are different levels of luxury, and knowing how to spot the difference between true luxury and, say, premium or fake luxury is very important. Let's take a closer look at the different tiers of luxury. When we talk about luxury, big names like Louis Vuitton, Cartier, Rolex, Gucci, and Hermes come to mind. But are they all on the same level of luxury? And what about brands like Nike, Adidas, Puma, Omega, or Brunello Cucinelli? In luxury, brands segment into distinct categories or tiers that reveal a lot about the target audiences, exclusivity levels, brand positioning, and the potential of a good investment. And understanding them is critical. If you thought Hugo Boss was luxury back in 2015, you were in for a rude awakening. Since then, the stock price has declined by almost 70%. Another example of a veiled luxury brand is Burberry, but that's a story for another episode. Alright, let's talk about the luxury pyramid, the name of the episode. While the luxury pyramid is not a new idea, it can vary depending on the investor. And the pyramid is also dynamic, meaning companies can move up or down. However, keep in mind, moving up is much harder than moving down. One mistake and you go down, but climbing the pyramid is very difficult. It requires immense patience and making the right choices consistently over many years. Okay, let's break it down from the bottom up, moving through the tiers of premium to ultra luxury. At the base, we have brands like Tag Heuer, Hugo Boss, and we call this tier premium. They offer excellent quality, but don't quite cross into true luxury. These brands are stylish and high-end, but they're not rare or exclusive, and a lot of companies within premium actually came from a higher tier. Other examples can be Nike, Tesla, Patagonia, Kenzo. Perhaps you have some other choices as well. Then we arrive at one tier higher, accessible luxury. This is brands like Michael Kors, Coach, or Tory Burch. These are for those looking to get a taste of luxury without the steep price tag. They're fashionable and approachable, and they're offering a balance of prestige and affordability. Many ultra-luxury brands have slipped down to accessible luxury or premium, and it appears that Gucci is also sliding down into accessible luxury. Well, management does appear to be doing the right things to turn it around, but like I said, falling down a mountain is easier than climbing back up. The third tier is what we like to call niche luxury. And this is quite a special tier. With brands like Loro Piana, Brunello Cucinelli, these brands don't flaunt their luxury. We also like to call this tier quiet luxury. They have exceptional quality and are very exclusive. And they cater to the very wealthy like Jeff Bezos and Mark Zuckerberg. Niche luxury can also be listed under a type of ultra luxury, but tends to be lesser known by the public. For example, the t-shirts from Mark Zuckerberg, famous for wearing basic grey t-shirts, all come from Brunello Cucinelli. They have no logos, but can cost over $500 for a basic grey t-shirt. The extreme wealthy know what you're wearing, but everyone else doesn't really. It's if you know type of luxury. The fourth tier is what we call high-end luxury, and this tier includes icons like Louis Vuitton, Chanel, Cartier, and Gucci. They are globally recognized, that combine tradition, status, craftsmanship, heritage, and are very appealing to wealthy buyers, but also the upper middle class. These are often brands that are instantly recognizable. Think of Gucci's signature red and green designs, Louis Vuitton's iconic logos on bags, or Cartier's distinctive jewelry. Many people who buy these brands want to show that they have taste and money, a kind of aspirational buyer in a way. Of course, this doesn't apply to everyone, but a large portion fits this description. We then arrive at the top of the iceberg, the pinnacle of luxury, or as we like to call them, ultra luxury. Brands like Hermès, Patek Philippe, and Ferrari fit this tier. These names are all about scarcity, heritage, and the highest handmade quality possible. They heavily invest in brand image and retaining heritage. They don't care about short-term profits and are all about the very long term. Their products aren't just bought, they're coveted, catering almost exclusively to the ultra-wealthy. Each of these tiers targets a unique customer, carving out a specific position within the luxury space, all while maintaining their identity and brand exclusivity. And these categories give structure to the sometimes confusing luxury landscape, defining who the brand is for and what it represents. And at first, I didn't really understand why people pay these absurd amounts for products or services. Sure, there are the usual reasons like appreciating the quality, the feeling it gives you, or simply because they can. But I do think there's another factor people miss, and it's investing. For people who can afford a Hermès bag or a Patek Philippe watch, it's not just about fashion or quality, it's also a way to diversify and invest their wealth. These individuals could put their money in stocks, bonds, real estate, or other assets, but another investment type is to buy luxury goods. And surprisingly, it can be a very good investment. Take a Hermès bag, for example. If you're lucky enough to get one, its value often increases fivefold almost immediately. The same goes for a second-hand Patek Philippe watch. Buyers are drawn to these luxury items because they tend to hold, if not gain, value. If these products lost 50% of their value after purchase, I do think the wealthy would buy far fewer of them. Consider this. An average person with 100k in the bank is offered to buy a 50k watch, but doesn't know if its value will drop or increase. Chances are they probably wouldn't take the risk. There's way too much uncertainty and 50% of your bank account. But what if the same person knew for certain that the watch would triple in value after purchase? I mean, who wouldn't go for it? That's a big part of what makes ultra luxury so intriguing to the truly wealthy, because it's not just about status or indulgence or showing off. It's also about the investment itself, I think. Knowing it's very likely the value will increase, and buying something that doesn't lose value doesn't really feel like spending money or wasting it. So, what's the key takeaway from this episode? Well, I think it comes down to a few important points. First, the luxury market is different from almost any other industry. Almost all sales still come from physical locations. People don't want to pay large amounts of money for luxury products online because it's not about the luxury product itself. It's about the experience and emotional connection to the brand. Secondly, the luxury pyramid is important to understand. Placing a brand in the wrong tier can be a big mistake and be very costly. Also, not every exceptional luxury company is a good investment. People recognize high-quality businesses like Hermes and Brunello Cucinelli. They also tend to trade at very expensive valuations. Last but not least, people buy luxury for several reasons. Having a unique experience, appreciating the craftsmanship, showing off, the emotional connection, feeling part of a bigger story, of a community, but also as an investment. And this might come in handy if you're analyzing a luxury business and want to understand why people buy these products or services. What a fascinating world, isn't it? Let me end this episode with a quote I found by Coco Chanel saying, "Luxury is a necessity that begins where necessity ends." And I just thought, what a great way of explaining the strange luxury industry. In the next luxury episode, we'll talk about the anti-marketing laws of luxury, important KPIs to look for, and even more. It'll be a lot of fun. And if you'd like even more content, consider following us over on Substack at The Dutch Investors. Or if you'd like to join our premium service, check out thedutchinvestors.com, where we give you a new, interesting deep dive into a new company every single Friday. We hope to welcome you there. I hope to see you in the next one. Bye, y'all.